31 concepts and strategies that, in my opinion, your financial advisor should know and understand to correctly structure IUL, Indexed Universal Life. By the end of this video episode, you will understand some very critical and basic knowledge and skills that will make or break your success with max-funded IUL. So I'm Doug Andrew, and I've been helping people optimize their assets and minimize taxes now for north of 48 years. During that 48-year career, because I'm approaching age 70, I have licensed and trained thousands of financial advisors. And as I teach them, I'm amazed at what they don't know. Even though they have all these licenses, and a lot of them have this alphabet soup behind their name, and they're sort of trained to just like follow the herd of financial advice. Oh, just put money in tax-deferred IRAs or 401ks. You'll likely be in a lower tax bracket when you retire. And that has not been true or axiomatic for more than 30 years now. But they keep telling advisors, hey, what the public doesn't know won't hurt them. Oh, yes, it does. So I've been very passionate about helping my own clients understand better how to optimize their financial assets and not outlive their money, and be able to make themselves immune from dangers like taxes, inflation, and market volatility, and be able to use strategies that will keep their money liquid, safe, earning predictable rates of return, totally tax-free, so that they will not outlive their money in retirement. So my favorite financial instrument or vehicle is a max-funded IUL. That stands for Indexed Universal Life. And so my 11th book talks about the LASERFUND because over 99% of Indexed Universal Life policies sold in America would not qualify as a laser fund. LASER is an acronym that stands for liquid assets, safely earning returns. And so an IUL policy has to be structured correctly and funded properly in order to perform as a supreme dream solution for all kinds of financial goals. And so I'm very passionate about educating the general public. That's why I have this channel, but also educating the advisors. So this episode, I'm going to go through 31 video episodes that I have a version for you, because many people, general public, they watch these episodes and they end up knowing far more than their advisor does, okay? And that's why they realize, hey, my advisor doesn't understand this. And so they oftentimes come directly to me, and then I point them to advisors who do understand it. And so then the advisors say, well, Doug, I need to learn as much as my client knows, because my client has read or watched these videos and read your books. And so I go, okay, you need to go through these 31 educational videos at a minimum before you can really effectively help your clients. So I'm going to go through these in this episode and just give you a glimpse of it. You may not be able to read them up here, but I'm going to use it so that I can sort of go through in order. So again, I have this library in a format for you to learn, but I also have the exact same topics in a different format for financial advisors. And if your advisor does not know these different concepts and strategies, you may want to rethink your thinking and change advisors, okay? So it starts out talking about what is the difference between term whole life and universal life. And that universal life was actually designed by E.F. Hutton for living benefits more than for the death benefit, okay? That's why it's different than whole life. Whole life is primarily used for death benefit. Number two, what does it mean to maximum fund an indexed universal life? What does that really mean under IRS guidelines? Maximum funded under those IRS guidelines so it'll be tax-free. Number three, why is cash value that grows inside of an insurance policy tax-free? So where does it say that in the Internal Revenue Code? And so IUL is tax-free, and it's like a sacred tax-free cash cow. You can understand that, and you will understand it better than your advisor unless they probably watch the same education. And number 4, doesn't universal life insurance cost more the older you are? If your advisor says insurance gets more expensive as you get older, they don't know what they don't know. So this can get cheaper the older you get. Have you ever seen an insurance policy get cheaper? Then you haven't seen one structured correctly like this. Number 5, why can't you fund a universal life policy all in one, fell swoop, one lump sum? If you want tax-free access, you can't do that. You have to spread it out over 5 years. Whole life takes 7 years. You wouldn't believe how many insurance agents don't understand why whole life takes 7 years and universal life only takes 5. Okay. Now, the next series, number 6, what's the difference between fixed, variable, and indexed universal life? I usually talk about the difference between fixed and variable because fixed came out first and then variable. A variable means your money's exposed to risk in the market. So seeking higher returns with variable life insurance means higher risk. So the next video is, what is indexed universal life and how does it work? Well, you get to participate when the market goes up and you don't lose when the market goes down. And a lot of people, even advisors, go, how does that work? They think I'm talking about indexed mutual funds. No, I'm talking about indexed universal life. You don't lose due to market volatility. The 8th episode, what does it mean to lock in your gains and reset? I compare this to like a ratchet wrench where you're tightening a bolt and every time you reset, you're not unloosening the progress you made. That's indexed universal life. Every year you get to lock in the gains. Meaning like in 2017, a lot of our clients locked in gains of 16%, 25%. I had a client with $1 million before 2017, ended up with $1,250,000 1 year later. The next year, if the market crashed 40%, they would still keep their $1,250,000. You lock in your gains every year and you reset. Meaning if the next year the market crashes, you may not make anything the next year, but you don't lose what you made the year before or years before. Well, a lot of advisors don't understand that. You will, but your advisor ought to understand that, or you ought to change advisors, okay? So I can use the metaphor of a ratchet wrench. What are linking methods that are used with indexed universal life? A lot of advisors, even insurance agents, don't understand the linking methods to be able to do this 1 year point to point, 2 year point to point, 5 year point to point, and so forth. What does it mean to rebalance your IUL portfolio? Yeah, you want to diversify. You can diversify like crazy with different IUL policies, companies, but also with the indices, the linking methods, and caps and no caps. Oh my heavens, you talk about diversification, but you're diversifying among superior vehicles, see? And so you tweak your returns by rebalancing every year. You wouldn't believe how many advisors I say rebalance and they go, what? What's rebalance mean? Ooh, that should be a red flag. Now, in the next series, number 11 episode, and I do these sort of in order, when you watch them, you will learn, sort of like a precept and then another precept that builds on the previous ones. And that's why I do it also for the advisors, because they don't know what they don't know. But once they watch these, now at least they know as much as you do if you read my books or watch these. So how can I access money out of my IUL, the cash value, totally tax-free? And that comes after under Section 7702 of the Internal Revenue Code. And I explain simply there's a sad way, there's a dumb way, and there's a smart way. And if your advisor does not understand those 3 ways, that should be a red flag. The next episode, why borrowing my own money in an IUL instead of withdrawing it is probably the smartest thing to do. How to become your own bankers and do what millionaires and billionaires do, where they borrow money at 4% and they continue to earn 25% on their money that they didn't withdraw out of an IUL policy. This is incredible, and I can't believe how many advisors don't understand this. They're totally clueless. They talk about the banking concept with whole life. And I'm like, what? If you really believe in the banking concept, you need to understand about this with universal life, because it'll knock the socks off of what a whole life policy can do if you understand the banking concept, how to become your own banker. The next episode, do I have to pay back loans on my index universal life policy if you take out loans? No, you'll learn, no, it's not due and payable during your lifetime. It's washed away when you die. But see, you grandfather yourself if you want, if to put money back in. You can pay back a loan and reinvest tax-free, but you're never obligated to, okay? A lot of advisors don't understand that one. Why would I want to pay the most premium into an IUL policy? If an advisor doesn't understand that, and you do, you ought to change advisors, okay? You self-insure. You are paying for less and less of the risk as the years go on, so the insurance policy is getting cheaper as you get older. And if you don't understand that, watch that episode. Next, what are the key elements of a prudent investment? Liquidity, safety, and rate of return. An IUL policy passes those tests, those key elements, with flying colors. Most advisors in America have their clients' money in investments where it fails the liquidity, safety, and rate of return test. Okay. Now, the last of the first 21 here, what are the actual historical rates of return? You will see that you can achieve average returns of 7 to 10%, and some years you will earn 25, 61%, even 153%, like some of our clients did in the year 2021. So you can see actual performance in history, because there's a lot of advisors that go, I've never seen one do that. Oh, really? So you think they don't exist? Have you ever seen your brain? How do you know that exists? Their reasoning is ridiculous. Okay. Next, how does IUL compare to other investment alternatives? So you will see charts and graphs, and this knocks the socks off of most other investments that are subject to volatility or taxes or inflation, and they just don't keep up. IUL does. Next, can IUL be used for financial goals other than retirement? I go through and show it's the dream solution, like a financial Swiss Army knife, for many goals like college funding, working capital for business, real estate management, emergency funds, estate planning, lump sum, pension maximization if you're a retiring school teacher. There's all kinds of goals, okay? Next, how come my advisor didn't tell me about this? Now, this is really telling. Most of them don't understand it, and they're not going to talk about something they don't understand. But their firms want them to churn your money in the market. They don't make as much money if they do this, and yet they're told to say, insurance, the agent's getting rich off of you. No, Universal Life, if you invested $500,000, your fees might end up being $20,000 or $30,000 over the life of the policy, compared to the agent, compared to asset managers that charge you 1% on that $500,000 as it hopefully grows to $8 million over 30 years. They'll make over $1 million in fees, but they act like the insurance is expensive. I can outperform them almost any day, and the fees are dramatically less. And so there's 10 reasons why everybody isn't doing this and why your advisor doesn't tell you about it. How can I tell if an advisor knows how to structure an IUL? There are 14 questions in this video that you should ask your advisor, and if they can't answer them off the cuff, that's a red flag, okay? And they're listed in my book that I'm going to gift you here at the end. How do I stay balanced with my investment portfolio? Yes, you balance it between 4 different buckets. I'm not telling you to put 100% of your money in the tax-free bucket, even though some of our clients do. We've taken many couples from a highest tax bracket to a 0% tax bracket. But I would recommend between 40 to 60% of your retirement income not even show up on your 1040 tax return. The IRS will know you're receiving it, but they'll know it's tax-free. And we talk about it in that episode. So that's 21 basic episodes that you can watch, but your advisor ought to watch the same episodes that I recorded for them. And if they don't, then you may want to rethink your thinking. Now there's 10 additional bonus ones, and these are the advisors that I point my students to. They also learn how to make their clients immune from the negative impact of taxes, inflation, and market volatility. They become a tax minimization specialist. They help people understand the missing structure between the strivers, arrivers, and thrivers, because you want to be able to thrive and not outlive your money. The advisors that watch this episode understand that at-retirement planning is something totally different than maybe what you did for your retirement planning, okay? And how to solve the IRA 401k dilemma. You're not saving tax by continuing to defer and take out RMD's required minimum distributions. The 5th episode, these are bonus episodes, how to help clients do a strategic rollout, not a rollover. Get your money out of those IRAs or 401ks sooner than later strategically, get the taxes over and done with, reposition your money into something that's going to be tax-free from now on, a portfolio of IUL contracts, and you'll enjoy tax-free income forever after and not outlive your money, okay? Then the last 5 bonus, how to teach using real stories that people can relate to, because some people learn more or better by stories. And examples of how a strategic rollout works, because if they don't do that, they're going to miss out on saving $250,000, $500,000. We saved one couple $1.2 million of unnecessary tax. Understanding how money works, how to become your own banker. If you like the banking concept, you do it with IUL. It's like bank on yourself on steroids. Number 8, how to help people get out of debt the quickest, smartest way. It's not by sending extra principal payments against your mortgage, okay? Keep real estate equity separate to increase liquidity, safety, and rate of return. Many successful real estate investors use IUL as their repository, their working capital account, to keep their money liquid and safe instead of just plowing it back into the mortgage, and then they lack liquidity when something happens in the market. And I can tell you horror stories about people who didn't learn that. And then finally, how to perform strategic rollouts and offset some or all of the tax by creating new deductions or resurrecting deductions that maybe your clients have been killing because they didn't know what they didn't know. Now, those are the 31 educational videos that are an absolute must watch. In fact, the ones that I do for financial advisors in a group called IUL Insiders, before they can watch the second episode, they have to answer correctly 5 to 10 quiz questions on the first episode, or they cannot watch the next episode. They must answer the questions correctly or understand the proper answer before they can go to video 2, video 3, and they do that through 31 videos. If they do not end up answering 150 some odd questions correctly, they're not allowed to watch the rest of the videos. Don't you want to work with an advisor that has correctly answered those 150 questions to optimize your assets and minimize your taxes? Then maybe you ought to point them to like IUL Insiders so that they understand and learn something, because you can watch these episodes and you will know more than they do. And I've seen this happen over and over again. So folks, if you want to learn your first step, besides watching the episodes on this channel, is to claim your free copy of this book, The LASERFUND. It's 300 pages. It retails for $20. I will gift it to you free. Here's how you claim your free copy. You simply go to laserfund.com, LASERFund.com, or click on the link below. You contribute a nominal amount towards the shipping and handling. I cover the rest of that cost, and I pay for the book. I'll fire out a copy to you. Now, if you'd like to listen and learn and watch and learn, there's options there for doing that. There's even an 18-hour masterclass. And check out some of the online events where we teach educational webinars and so forth about these concepts. But this is about you, and I hope that you will learn, and then that you will be able to find an advisor who understands how to help you implement these concepts, because you do have to go through a licensed advisor. But I don't want you to make mistakes by choosing the wrong advisor or those that are not proficient. Those are the saddest stories I ever hear.